everybody. Happy Tuesday once again. Crypto market cap is 2.35 trillion. We're going to take a quick trip around the world and try and share all the financial data that I believe is very pertinent for us to be successful in the future. Bitcoin still hovering around that 63K. ETH $3,000. Fear and greed back to 68. And we have a packed show today talking about a whole bunch of different things. Let's jump in. And none of this, of course, is ever financial advice. And shout out to everybody on Patreon that make all this possible. Patreon saved me from a slow death of ETH and DOT. Oh, whoops. Well, again, winner takes most. That's how it works. We'll touch on some of that today as well. Thank you for being part of the family. Okay, starting with the ugly news first. Let's look at unlocks. And again, it's still hard to believe how some people still own these tokens. They just rain down every week and they suppress price. So just don't be holding these bags. So Aptos, big 2.64% unlock for the week. DYDX has been raining tokens all year. Stark as well. Cyber and whatever this thing is. Avo, 757% unlock. Crazy. Arbitrum, big one too, 3.5%. ApeCoin, 2.5% rating all year. Ape, if you ever aped into Ape, you made a big mistake. Thank you so much, Fatold, Crypto Nerd, for being in the community as well. And to the mods, TND, Tesla, K8, and everybody else who's here. Let me see. Let's jump forward. More ugly news. In the US, 30-year mortgage rates spiked up again to the second highest level they've been since the year 2000, 7.22%. This is absolutely crushing the real estate market. It's putting houses out of reach for everybody. Thank you, Fed. Well done. Another industry you've destroyed under the guise of killing inflation, which you love because of all the debt and money printing. Anyhow, craziness. Another really ugly news, everybody. Shout out to Sanjay for sharing. This is the advanced economies and their growth. Q3 2023, Q4 2023, everything negative. All these countries, negative GDP growth per capita. Luxembourg, really ugly. Israel, of course, well, we know what happened there. Austria, Canada, Czech Republic, Estonia, Finland, UK, Sweden. This is not the direction you need to be going in, ladies and gentlemen. GDP per capita is the amount of output per country per citizen of that country. And when it goes down, it impacts everybody. That is really, really bad and a sign of maybe things to come. We'll talk more about that towards the end. What could save this particular statistic here? And Social Security running dry in the year 2033. Now, I know sometimes when I share this type of information, people get very upset. They say, no, it's going to be fine. It's going to be great. It's like, no. And sometimes I got to share ugly truths, but most people are receiving Social Security benefits than the amount that's being paid in. And if nothing is done, the trust fund will run dry in 2033, maybe earlier, maybe 2035, at which points benefits will have to be cut. Or, as they're already planning, increasing the retirement age to like 70 and hope. I was about to say something dark. I won't say it, but it's comical and it's criminal. People have to pay into this thing, but they never have a chance of actually collecting as well. People should have the option to opt in. Anyway, enough of that bad news, but more ugly news. We have a 14-year high in credit card delinquencies as well. 3.2% of all people now that have credit card balances cannot service the payments. We're not even talking paying them back. They can't even pay the interest on the credit card debt. And that's about to go a lot higher too. Again, all because of things like high interest rates. And another really ugly news. Sorry about all this bad news, but just get it out of the way fast. C19 savings are now gone. Consumers have officially run out of post-C19 stimulus money, and the excess savings that people stockpiled after the pandemic have run dry. Now a deficit of $72 billion. People are out of cash, and many of them are also out of savings. So many simply are not getting by. This is an ugly setup, a very ugly setup for a presidential election. unless you get promised things like loan forgiveness and social checks and stuff like that. But again, all of this points to infinite printing and a debt spiral out of control. So, time for some bad news now that we got the ugly stuff out of the way. And first of all, this is last week's data. Every week I show it on a Tuesday from our friends at CoinShares, but we had 4 straight weeks of outflows. I did say last week when I shared this, it's very rare to have 4 straight weeks of outflows and it would turn around, but it did turn around on Friday, but it was too late. It was still negative for the week, and the total deficit was $251 million. But remember, we had $600 million come into the 9U ETFs alone on Friday. So it would have been a lot worse if that did not come in. And of course, yesterday was positive too, about 220 million, if I remember. So this week should shape up to be good as well. Now let's look at miners. Again, we're still in the bad news. Haven't come to the good news yet. And there's more minor good news too. But as I always stress, surgically excise the winners. All right. Not only am I the Solana help desk, but I'm also the CleanSpark help desk now is the latest joke. But Bitcoin miners that have outperformed typically in the previous bull market have really done very well. But this year is different. This bull run is different. And by the way, a quick reminder, as I've said before, the bull run began December 2022, January 2023. So we're nearly a year and a half into that, everybody. So for those of you who are thinking, oh, the bull run's just beginning, no. We're deep into it, okay? Halfway through. It's very important to get your bearings and know where you are in the cycle, all right? Because some people are still saying, oh, the bull run's going to start soon. It's like, no. The big juice has already been squeezed from this bull run. What's interesting about this, if you look at previous cycles, the miners historically smashed Bitcoin performance. This time, there's only one miner that actually beat over the last year and a half, which is my number one miner for the last year and a half, coincidentally, is CleanSpark. Bitcoin is up 290% since the bottom. And CleanSpark has more than doubled. CleanSpark is up nearly 850% since the bottom as well. But all the other miners on average have a return of 200%. They are underperforming Bitcoin by 90%. And if you go back to 2020, 2021, many of the miners saw 10x or 20x the returns that Bitcoin had over the same period. This time, the miners have not had their moment. Now, after crazy 850% return on CleanSpark, will it get another 10x? The answer is no, probably not. Again, most of the juice has been squeezed so far, but there is still some running to go. Is there a chance that the miners are running late and they will smash it for the next 6 to 12 months? I don't know, but we'll be here to find out. I don't think so. But either way, this time is different. And I've said that repeatedly for the last year and a half. Very different. And another kind of bad news, Bitcoin miner revenue per terahash tanks. Last week we talked about the crazy impacts of the hype around runes that was having on the Bitcoin network. That's now since fizzled away. It was in and out for a few days and then gone. And now we see the actual rewards are really down a heck of a lot. Talk about a flash in the pan, which is what we discussed it as. And now miners are going to start to struggle. And related to that, there's some changes happening to the ecosystem too. And we have a lot of miner earnings reports coming out this week. We'll be covering those too. I'll write up little reports on them as well of what I interpret. But remember, what happened in Q1 is not what matters for Q2, because the markets should be forward-looking. Often they're not, but the clever people that invest tend to be as well. Now, another kind of bad news. This is the Apple chart, and you can see what the black dark line is the Apple stock price, and the actual teal line is the Apple shares outstanding from Charlie Bilello. And is this a kickback or a buyback? Apple has bought back $625 billion in stock over the past 10 years, which is greater than the market cap of 492 of the 500 companies in the S&P 500. All right. When companies buy back their stocks, they juice the price. They reduce the float. They increase the price. General Motors is doing the exact same thing now. They issue debt to buy back stock to make the CEO look great. So be careful of these stock back games. And stocks can cut both ways. One, you can get hit by stock dilution, but also sometimes things are a little bit artificial as well in terms of like earnings per share. When you reduce the number of shares, earnings per share goes up, etc., etc. So watch this very carefully. And Apple also have a brand new product coming. Well, no, not really. It's an iPad. It has a new M2, and I think it'll have an app on it that will do AI, just like any browser would. And maybe soon they will develop a new color. We're not sure, but that would be a big game changer. Anyway, if you want a recap of all these, the team puts together a complete review of them all the slides, all the content in a Substack you can listen to or read it if you prefer in case you missed anything. 10 cents a day. Now, the good news, and all we try and do is cover costs here. The good news, crypto market cap over the last 7 days divided by Bitcoin, not bad. TON is up, Sol is up, Near, Polkadot, Cosmos, Render, dark green Render, and WIF, meme coins are still there, which is bonkers. In terms of dollar terms, you can see Bitcoin just flat. And I know a lot of people had high expectations for this week, and we basically haven't gone anywhere in the last 7 days. Ethereum down 0.5%, Solana up over 10%, and Near, I can't read those numbers, but anyway, not bad at all. We'll see what happens next week. But there are some inklings that the alts, at least the winning alts, as Mando said yesterday, there is an alt season happening, but it's only if you are in the right alts. Very important. Just like CleanSpark, focus on finding the winners. Winners take most. So far, the monthly returns were up 5.5% for the month of May. We haven't gone very far, but it's shaping up to be okay. And we saw an amount of whale movements, which are quite staggering too. Now, crypto stats. Since I've been doing this now for 30 weeks, it's hard to believe. The crypto market cap has gone up $1.03 trillion in 30 weeks. The users have doubled, and the transactions have gone up 2.5 times, from 40 million transactions to 98 million. Stunning amount of adoption. And again, there's another year or so to go of this. I can't wait for the time when we have a DApp that has enough to onboard a few 100 million users. And then we get to 1 billion users in crypto. That'll be big. Now, Bitcoin season, we're at 37. So Bitcoin is still the strong one out there for everybody. Last week, I think it was 39. So it's actually come down a little bit. And if we look at the top 50 over the last 90 days, now if you exclude the memes, Arweave did really well. So did Near, Render, Solana. Solana's up 53% over the last 90 days. Bitcoin's up 43% over the last 90 days. And cast your eyes on all the red on the right over the last 90 days. All the stuff that I have kind of frowned upon, including one item which I own, and that is Injective. That's down there too, down 20% for the last 90 days. But all the usual stuff, Caspa, Tau, Celestia, Arbitrum, Lido, Sui. Chainlink's in there too, Optimism, Matic. Cardano. We're seeing a big change in the guard. And again, there is kind of an old season happening, but it's heavily influenced by the memes and a couple of winning names too. Remember, be in the winners. Global liquidity, thank goodness. We've been waiting for ages for this to turn around. And now, at last, global liquidity is up. I still have a target for the end of the year to be 100 trillion of global liquidity. We have quite a ways to go. But it's hard to see that little tail. I forgot to zoom in and show you, but it is a little tail going up after weeks and weeks of going down. And we saw that as well with USM2 going up for the first time in a year and a half, and many other things too. So that will help float all our boats. And this is an interesting on-chain piece as well from Glassnode. This is the 6 to 24 month hodlers. their cohort, they have increased their bags a lot, which is interesting. They have held for between 6 months and 2 years. And during this so-called divestment rally, when everybody was selling, these folks added to their positions, which I find pretty uncanny. So they're not long-term holders, but they're sort of medium-term holders, I call them. And for them to, actually it's a 6 month to 3 year holder. So yes, they are long-term holders. Sorry. I said 6 to 24 month. My bad on the title. But again, they have been stacking along with the actual whales as well. Now, there is also that magical short-term holder cost basis that we spoke about a lot over the last couple of weeks. People were freaking out. People were calling for $50,000, $40,000, $30,000 Bitcoin. But historically, in a bull market, the price rarely penetrates the short-term holder cost basis, which is now $59,800. Call it $60,000. So consider that the floor from here, and as we go forward, it'll increase. So those of you who are waiting for 50,000, there's always a chance of the black swan it'll happen. But waiting is hoping, and hoping is not a strategy. Just made that up. I don't know if it makes any sense, but in my little brain it does. Also, a lot of talk out there that this market is way more volatile than ever before. No, it's not. It's not at all. Measured from the $73,000 all-time high, the Bitcoin price corrected by 20.3%, which is the deepest correction of the closing basis since the FTX lows in November 22. But that said, these corrections are a lot shallower than historic cycle corrections. Okay, so it is far tamer than in the past. If you look back at the colors here, the 2015 to 2017 is in blue, and the 2015-2017 uptrend occurred during Bitcoin's infancy with no derivative instruments available for the asset class. So that rally was entirely spot-driven, which perhaps gives some indication that the current market structure may bear some similarities. And a great deal of leverage was in the 2020 to 2022 cycle, and that was washed out in 2022. And the new US ETFs have a new demand vector that is driving up a lot of the spot action as well. So again, like before, this time is quite different, and it is more timid compared to older cycles too. Now, fear and greed is at 68 last week. If I remember, it was at, I think it was 67 last week. So it's up a point. Not bad. And we had that dip. It was kind of crazy because the fear and greed totally lagged the price action. You know, when we dipped down to that 60,000, 58.6 temporarily, it took the fear and greed index a couple of days to get down to, I think it hit 46 or 44, and then it rebounded fast. So the market's still greedy. So that's a good sign that we're in a bull market too. Also, miners, back to miners. I will be doing a miner update as soon as I can get all the data in. But the Bitcoin mining difficulty is set to have the sharpest drop again since the FTX collapse. And this is from JVS, James Van Straten. Despite the hash rate correction, miner capitulation has not yet confirmed after the Bitcoin halving because they short-term made a lot of money on fees. But this is a critical juncture as well because way back last year, I expected the miner break even for the most of the miners to be about 70,000. It looks like it's holding to be pretty true, maybe a little higher, 75, maybe 80,000 for some miners. Some miners still are doing very well, but this will have a big impact. And this is actually good news for many of the miners that are struggling with the very high hash. So we'll see. And speaking of other miners, Marathon joins the S&P 500 SmallCap 600. And that makes me ask the question, when will MicroStrategy be added to the S&P 500? They're already ranked number 350. And Marathon rallied big, 18% on this news, because that forces funds to buy, which is a great way to actually pump the stock. Once MicroStrategy gets added to the S&P 500, expect a massive pump to the tune of maybe 25 to 30%, I believe, based on history of other assets that have been added. Now, let's look at the individual asset flows. Bright spot last week was the successful launch of the spot Bitcoin and ETH ETFs in Hong Kong. and they saw about $307 million of inflows in the first week of trading, which was a shortened week. I think it was only 3 or 4 trading days. And as usual, the primary focus was here. You can see Bitcoin had 284 million of outflows last week. The month, 291 down, but year to date, 12.5 billion, which is big. ETH had a positive week, up 30 million, which is nice. And then altcoins, all of them, which is also very unusual, saw inflows. Solana got an inflow. Litecoin got an inflow. Cardano got an inflow. Polkadot got an inflow. And I think a couple of others as well. Avalanche got some. So overall, interesting. Could this be a sign that maybe alt season is happening? Who knows? We'll see. And other stuff, people talk about the big waves of funds. We're getting all these 13F reports about people coming into Bitcoin. This one took a lot of people by surprise today. This is a firm called Susquehanna International Group. It's also known as SIG. And they now own, get this, $1.3 billion in Bitcoin ETFs. Now, they do have their total assets under management from my research is 438 billion. Call it $500 million, but having 1.3 of that in Bitcoin ETFs is pretty impressive indeed. So, and they've bought a little bit of everything. They've got ARK, Bitwise, Fidelity, Grayscale, Invesco, Valkyrie, VanEck, WisdomTree. They spread it all around. So interesting. And the question is, when you got big firms, like $500 billion firm is not to be sniffed at. It's big, but there's lots more of those in the US. And when they start seeing what these fund managers are doing, it's going to bring more in. And the wave is going to get bigger and bigger and bigger. And this thing is scarce. So let's talk about Dex Volume for a second. Number one in Dex Volume of the last 24 hours is Solana, $1.1 billion. Ethereum, just shy of $1 billion, 998 million. Binance Smart Chain, 482. Arbitrum, 338. Base, 186. And the rest are crumbs that don't even matter. So again, winner takes most. We're seeing that here. And it's good to see Solana Dex Volume up again after the little bit of congestion issues they had a couple of weeks ago. Speaking of Solana as well, and by the way, I also on this channel, I talk about what I believe are winning assets. I don't spend much time on what I believe are not. So there is this thing called the black hole that I've been talking about as well for a year and a half. In fact, since the start of the channel, that is now report over the last week, $52 million has been bridged from other chains into Solana. And this has been facilitated by Wormhole and DeBridge Finance over the last 7 days. Wormhole helped suck $22 million from other chains, most of it from Ethereum and I think it's Arbitrum. And DeBridge pulled in $30 million as well over to Solana. So multi-chain world is here, but it's not exactly benefiting all the other chains, which is interesting. And another drainage issue, Sol DePIN Steals Another one. There's a firm called Ambient. It's a Solana-based decentralized physical infrastructure network focused on collecting environmental data, and they raised some money in a seed funding round. Now, I don't care much about that, but what is interesting is what this firm did was they acquired PlanetWatch Network, which was an Algorand-based platform. And now this new firm called Ambient is taking PlanetWatch and they're migrating it to Solana to run as a DePIN play. And they just raised money too. So again, another example of the black hole. And Telco is coming to blockchain. I don't need to say who the biggest telco blockchain provider is. You guys know the answer, but Vodafone is a beast. They have literally, I think, 500 million customers on the planet, maybe more. And they plan to bring blockchain technology to smartphone users by integrating cryptocurrency wallets and subscriber identity module cards. SIM cards. Sound familiar, anybody? Yeah. Saga phone. Now, the mainstream stuff is doing it. And this is great for the whole space. Great for blockchain too. Let's talk about stocks. Stock market over the last 7 days. Nvidia up 4%, Apple up 8%, Google up 10%, Tesla up 3%, Alibaba up 11%, Meta down 10%, and the rest kind of mixed all over the place. But as usual, AI stuff does well. And speaking of AI and whole Mars catalog, doubling down on FSD miles. Getting to 1 billion FSD miles took more than 3 years. Getting to 2 billion miles took less than 12 weeks. All while compute is added like crazy, we are reaching escape velocity. There's been a lot of talk that Tesla will never solve FSD. Everywhere I drive, I use FSD, and there are no interventions, and I go through some tricky conditions, okay? Speaking of no interventions, this is what's happening right now. This shout out to Dr. Know-It-All. If you combine a couple of graphs he put together, this is a distance to critical disengagements. And what this basically means is right now, you can see there would be one disengagement initially every, say, 30 miles, 20 miles, whatever. Now it's up as high as 340 miles between disengagements. And again, the point is escape velocity. It is a combination of city driving and freeway driving, and it's going vertical. Okay, so FSD is learning very fast. The releases are coming every 7 to 8 days. And this firm, as Elon Musk says, they will spend $10 billion this year in combined training and inference AI, the latter being primarily in the car. Any company not spending at this level and doing so efficiently, you can spend $30 billion on AI and inference, but if you're not doing it efficiently, you're wasting money. And Elon believes they will not be able to compete. Now, this takes us to the key story now of this and why, as investors, we are going into the next biggest revolution. AI was the first, and AI is just beginning. But tied to AI is bots. And over the next 15 to 20 years, humanoid robots will disrupt human labor throughout hundreds of industries across every sector of the global economy. This is what I began with. I believe, this could help increase GDP around the world, which could increase people's standard of living. And the key insights here is, 1, humanoid robots will disrupt labor. It's inevitable. Number 2, the disruption will create an entirely new labor system. And number 3, the disruption of labor is about tasks, not jobs. Tasks. As I said before, everything will become a gig economy about very little tasks, finite tasks. People are going to live in places for a finite period of time. And the picture on the left is a factory in 2025 where you see one robot and many employees. 15 years from now, it'll be one employee, many robots. Okay, that is just a reality. And if you think, oh, it's hocus pocus, it's not. And the pace of change, just think of this S-curve for FSD and engagements from maybe 5 to 20 miles to every 320 miles. That's going to go to every 1,000 miles and then 10,000 miles and then maybe every 100,000 miles you drive, you might have to disengage once. But the point is, the machines are taking over and they're coming fast. And then Elon Musk commented on a post here from Smoke Away. Optimus production ramp. Obviously, I believe, and so do many other people out there, believe the biggest and the best bot maker will be Tesla because of their ability to make stuff and their AI edge and their data edge and their FSD and their inference. And Optimus production ramp believes they'll build 1,000 by 2024. By the way, when they showed the video at the weekend, they had 24 of these already in one shot. So they probably already have 100 at least. Could they make 1,000? We're not sure this year. 2025, 10,000. 2026, 100,000, etc. Because the robots can make the bots soon. But Elon said not quite that fast, but also not far wrong. Which means by 2030, there could be 1 billion of these made by Tesla. 1 billion robots that can do pretty much what most humans can do. So I don't want to alarm people, but prepare for what could be coming and has a pretty high chance of coming too. So with that, everybody, hope you like the content and hit the like if you like to see other content like this. Thank you to the mods in the chat. AI is coming. Yeah, I see a comment there. AI will get there. Yes, it will. And women will marry robots. Yeah. Who knows? It could cut both ways as well. These comments are funny. Anyway, yes. Thank you all for coming. Thank you to the mods in the chat. Have a great day, and I'll see you all tomorrow. Bye-bye.